Hello everyone, welcome to Just Invest Today. And in today's video, we're going to talk about investing for beginners in 2022 because it's just around the corner, man. And you guys got to start investing or start getting into the mindset of actually learning how to invest, especially if you're a beginner, man, because you can compound your wealth at a crazy rate if you do the due diligence and you actually study it. Right now, I want to talk to you about what is a stock, man, because a lot of people don't understand what a stock is. They think it's just gambling, but that is incorrect. When you own a stock, you actually own part of the business. You own a fraction ownership of the actual business. The stock is just the shares of the business that it actually hands out. But when you actually own the stock, you actually own a part of the earnings, the corporate assets of that company. Just think of this. Warren Buffett owns around 5.5% of Apple stock. Yes, he owns part of the Apple stock because he actually owns shares in the company. Just this year, he got $800 million in dividends because Apple actually pays out a portion of that, and Warren Buffett, as the owner, gets that money. So when we look at stocks, we're actually looking at an actual business. So once you get that in your head, you have two options to go through. You're either going to have to take the red pill or the blue pill. And I'm going to get into what that means. But before I get into it, guys, can you please like this video, subscribe to my channel? I'm going to be providing you with so much good content. So let's get into it. So you have a decision to make if you're just starting out in the market. You're either going to take the red pill or the blue pill. Red pill is actually you becoming an individual investor, a long-term focused investor, actually researching companies, reading 10Ks, reading books, and keeping up with the news. That's what you're going to have to do if you take the red pill, if you go into that direction. But I understand a lot of people do not like investing. They don't want to do all that research. They don't want to look up companies and what they do. So then you have to take the blue pill. The blue pill is just index investing with dollar cost averaging. So I'm going to get into what the index is. And the index, there's a lot of indexes, but if I was just starting out, I would invest in the SPY. The SPY index follows the best 500 American companies. And over time, that's going to give you around 6 to 8% over like a 50-year period. So if you just go long-term in an index fund, over a 10, 15, 20-year period, you're going to get around 6 to 8%. And you can also invest in the VCN. This is also on the Canadian Stock Exchange. It follows small caps, medium caps, large cap stocks, those best companies in those sections. And that's going to average around 6 to 8% as well. So if you're Canadian, you can go that route. If you're American, you can go the SPY route. Or even if you're Canadian, you can still do the American way, invest in the best 500 companies. That's what I would do. So first, you have to make that decision. What am I going to do? Take the red pill, you're going to invest in individual companies you're going to research, or you're going to take the blue pill, which you're just going to lay back. You don't have to do anything. You just have to put your money in there every month or every 2 months, no matter what the market does. So going the index route is a perfect opportunity just to get average market gains. And that's perfectly fine if you don't want to do your own research. But on this channel, we do our own research, we read 10Ks, we read books, we do all of that good stuff. So we're taking the red pill on this channel. And if you're taking the red pill, that's the way you're going to have to go. And you're going to have to actually put some time in. So the first thing you got to realize, it's not that scary. It's okay. Trust me. When you really think about it, investing is more about your temperament than you having some crazy IQ. We are going to beat the fund managers, the institutions, with our temperament, being calm, being patient. It's not about how much IQ you have or all that knowledge. The best investors tell you that the stomach is more important than the brain, because you're going to have to actually be okay with 20% drops, 30% drops, 40% drops, maybe for a year, 2 years. You have to be comfortable with that. Institutions are not comfortable doing that. So you have to realize that. Now, on top of that, you have to start being able to value a business and understand the market. So I'm going to give you 4 sets of books that you actually have to read so you can do your research. Once you read these books, you have to actually be able to value a company and actually understand what the market is and what the market does. And that's going to build your foundation to invest. So the 4 books you're going to have to read include One Up on Wall Street by Peter Lynch, an amazing book, will get you in, get your feet wet into the market and get you understanding how to think, what businesses to buy and what to look at. You get Rule 1 Investing. This is an amazing book to kind of get your feet wet as well, and you learn how to value a business. Vested is another amazing book by Phil Town and Daniel Town, and this is a book that will just get your head around the market, what to do, how to actually start investing, and how to kind of get your confidence up, which is a really good book for beginner investors. Then we have the last book, Intelligent Investor, and this is a hard read, but all you need to do is read chapter 8 and 20, and that's going to provide you with the contents of what Mr. Market is and kind of the margin of safety, how to look at a business and value it. So those are the books I recommend just starting off, that should get your feet wet before you get into investing, before you start doing your own research. And I recommend actually kind of learning the fundamentals of accounting, because remember, the accounting is the language of businesses and the language of actually investing. So you have to get used to that. But the whole point of investing is thinking about the long term, 4 to 5 years out, and you got to make sure you can see that business 4 to 5 years out. Because remember, stocks are not gambling. That's the main thing you got to understand, is you're not gambling in and out the market, because that's going to hurt you overall. Stocks are actually part ownership of the business. So you have to remember that. And then on top of that, lastly, you are eventually going to build up a portfolio of like 4 to 5 companies that you really love, you really enjoy. And that's where you're going to start off. Companies that you already use, like you probably already use Amazon, you probably have a bill to pay, whatever it's Rogers or Verizon, like whatever bills you have to pay, that might be a company you start looking into and just seeing how things work. You just get your feet wet with those companies. You use the Apple, you use the iPhone, you use Samsung. Then actually start researching the company if it's a strong company, and you just start getting your feet wet. And then once you start doing that, like invest with a small amount of money. Don't go hard first off, because you don't know how it feels to invest, the emotions, because you're going to get emotional because it's your money and you're going to see it going up and down, but that's not what you look for. So if I was investing, that's how I would start up. That's how I would actually get into the market. And that's just a beginner guide for 2022 for investing, guys. So tell me if I missed anything. Tell me if you like this video. Please like it, subscribe to my channel, and I'll get back to you in the next video. Peace.